Morning, guys. Okay, so welcome to the first class of CFA Level 1 for the November and the Feb 2025 attempt. So my name is Alan, and we'll just begin the class in just a while. I'm just waiting for the rest of the students to just join in. So hang in tight. This is the first class. I'll also be discussing in the lecture on CFA in general also. uh, Also discussing on the game plan, how to clear the exam. So all of that we will start in a while. This is the first lecture, so we'll just make try to keep it a little more lighter in that sense. And but what we will try to do is whatever we learn today, we will make sure that we look at all the practical examples possible, so that whenever we are attempting the CFA level 1 exam, we do not think from the perspective of just academics but also practical application. Okay, so we will start all of that. Let's just wait for 2 minutes more. It's 9:59. We start at 10. Okay, so just give us 2 to 3 minutes. Let the other students join in, and then we'll begin. Okay, so I hope my voice is audible to everyone.
Yes.
Great. So let's just get quickly introduced. If you wish to enable your cameras, you can do that. It will be more interactive and will not feel like you are attending an online class. Otherwise, the tendency is that since we do not enable our cameras, we feel as if we are not sitting in a real class. So let's start. Let's get a quick background on what your experiences are, and what your qualifications are, what your objectives are, and then we begin with the content. Yes, Mr. Praveen, if you could tell us what your backgrounds are to the entire group.
Hi, Arun sir.
Yes, keeping 50,000 or 40,000 or contingency
What is that?
because anything can happen in.
Oh, somebody was talking about contingencies. Anyways, yes, Praveen sir.
Okay.
So if you could
Can
tell
you
us
see me?
the highest qualification, yeah. Highest qualification, your backgrounds, please.
Okay. My qualification basically, I am a BCom graduate. I have done my graduation from Delhi University way back 2004.
Okay.
Apart from that, I have done my post graduation diploma from Symbiosis, that is through distance learning,
Okay.
specialization in admin and finance.
Okay.
And regarding my work experience, I have 12 plus years experience. I have
Right.
worked with Jubilant organizations. I have worked with Infra 13. I
Okay.
have worked with Credit Suisse, and currently I am with 3M
Okay.
for the past 6 months. So
Okay.
my role is basically into finance and accounts,
Okay.
and I want to upgrade my skill. That is why I have joined this course. Thank you, Arun.
Thank you. Anybody else who would like to tell us their backgrounds, please? Yes, please go ahead.
Hi, Alan. Good morning, everyone.
Hi.
Just switching my camera on. Let me know when you can see me.
Yes.
Good morning. I'm Nishit, currently working in Abu Dhabi National Oil Company here in UAE.
Wow.
My highest qualification is MBA. I completed my MBA from SPJ Global back in 2017.
Okay.
Post that, I have also pursued strategic financial management course from IIM Indore. That was in 2020, 2021. In 12 years of experience, I have worked across organizations coming from whether it's a utility industry back in India, and then working here in consultancy and then manufacturing, and mostly in assurance functions. So I have been part of internal audits, risk management, compliance, governance, and then I also have experience in engineering. The intention behind taking this course is I see myself moving up in the ladder very soon. Currently, I'm working very closely with the EPC and project management team where I'm handling project risks. But again, when it comes to financial modeling, I feel that I can still enhance my skills so that I get into those quantification of risks and quantifying the contingencies that we propose in our business cases. So this is my agenda of pursuing CFA.
Fantastic.
Thank you. Thank you so much.
Okay, Sanat Runwal, if you can hear me. Hi, Sanat, how are you?
Yes, sir. Go, sir.
All ready for the first class?
Yes, sir.
Okay, great. So yeah, just share your background if you could. It will help the others. Also, guys, what I'm doing is I'm just sharing one reference book on the CFA or CFA group. Okay, just in the class today, you refer to this book. Okay. The reason is, the reason why I want you to refer to this big book is basically because the content is original and the perspective is not just the exam. Okay, so the idea is not just to clear the exam, because if you focus on the exam, then it's going to be very, very boring, journey to complete all the 3 levels. So on the group, I've added the PDF. You can just keep it open at your end. Any which ways, I will also be opening it, but I'll be also opening the summary sheet. Okay. So that's how it's going to work. So anyways, yeah. Yes, Anand, go ahead. I'm so sorry.
So I'm a recent graduate from 2025, and right now I'm switching my career to finance. So I'm quite interested in financial modeling and financial assessments. So that's why I'm switching right now. I don't have 12 years of experience, but surely I will get something from here.
Of course. Of course. Everybody has to, right? Great. So now let's start with first understanding that the CFA level 1 or the CFA program itself, right? First of all, let's remove that obstacle in our mind that you need to have a commerce background for this, or you need to have any kind of qualifications before this to pursue this. Okay. CFA Institute does not assume, okay, it does not assume, neither does it recommend that people have certain qualifications or background before starting this qualification. And you'll come to know exactly why when we will discuss the first chapter today, the financial statement analysis. You will see that probably even if you had a background, even if you had done an MBA, even if you had done, let's say, a BCom or a BBA, probably 99% chances that you have not read this. Okay, you have not looked at things from this level of basics. Okay, from this level of you can say simplicity, right? Because if I also from when this is long back, probably most of you won't be able to relate, but I passed out my class 12th with science. Okay, and then and I actually was supposed to go into engineering, but at the last moment, I thought that probably shifting into commerce would have been a better idea. because I would understand commerce, management, investments, finance. Unfortunately, that was the biggest mistake that I made because there was no finance in BCom. Although the content might have been there, but the way it had been covered, there was no structure to it, right? So for me, the reason why I ended up doing CFA, way back when I was doing my graduation final year, was exactly this, because this was the only, probably you can say, the qualification which started from scratch. Okay. So now when we are doing CFA program, of course, we have to understand that why are we doing it? We are doing it because it is the world's largest investment qualification. Okay. It's the biggest, it's the golden standard, if you had to say. And these are just not words, these are provable. It's proven. It's not like any other XYZ qualifications, which claim to be, very recognized. Most of the IIM syllabus also derive their content from CFA. And whether you go in any part of the world, and if you want to work in investment banking, corporate finance, anything to related to investment decision making does not have to always be about stocks, right? It can also be about projects. It can also be about treasury decisions, right? But so you go anywhere, there is respect that you will get, and there is recognition that you will get, and then there is, as you specifically if you're working in the corporate, right? I don't see that anyone has to do any other qualification apart from CFA if they do it completely and properly. Okay, one qualification you do, but you do it properly. Okay, so it's the golden standard I already spoke about. Second is, in my time it used to take 3 years. Now it takes what, 1.5 to 2 years, you can complete it. Okay, all the levels, level 1, level 2. Way back in my time, it used to be offline 6-hour exam. Now it's somewhere around 4 hour. In my time, all the exams used to be conducted in one day. Now you have got slots. In my time, the exam used to be, level 1 used to be conducted twice a year. Now it's conducted 4 times a year. Right? And in 4 times also there are slots, 7 days, 6 days slots available for you to go and give the exam. Of course, that time it used to be offline. Now it is CBT based, which means computer based testing. You go to the center, you give the exam, MCQ based, and the results are declared within 20 to 30 days. The pace of declaring the results have also increased significantly, right? The pass rate is somewhere around, my time, it used to be 36% 10 years back. Now it is somewhere around 42%. Okay. Another thing is, we've got 10 subjects. People tend to think that when we're talking about 10 subjects, mean that you have to give 10 exams. No. 10 subjects means all of first exam is going to include the 10 subjects, out of which introduction to financial statement analysis or financial statement analysis in general is one subject. Okay. So 10 subjects, and 10 subjects will not change in level 1 and level 2. Level 1 and level 2, mostly the subjects are same. The weightage will change. Okay. So level 1 is all about basics, very basic stuffs, financial statements. And in fact, for the first 3 years of you working, if you are a fresher and you're working in the industry, then I feel that the CFA level 1 syllabus is more than enough in terms of the content background that you need to work in, any of the investment work that investment career that you take, whether you take your work in credit, whether you take your work in risk, whether you take your work in research, whether you take your work in wealth management or in corporate finance. The content is pretty, you can say, intense, comprehensive, and there will be no gap in your mind when after you complete CFA, in terms of the knowledge. Sometimes we feel that, oh, I don't know about certain things. That is not going to happen. Okay. Now, out of that 10 subjects in level 1, now I'm talking about specifically level 1, you have to focus on the tools. Okay, so the subjects are divided into two parts. Okay, so I'll write here. What do I mean by tools? So with tools, we analyze the assets. Think about this, like in a general investment scenario, we are using some tools, okay, to take decisions. So decisions will be taken on equity, stock, private equity, right? Whatever you want to call it, M&A. Decision can be taken on fixed income or debt in general, that may we speak. Decisions can be taken on alternative investment. Decisions can be taken on, overall portfolio management. But how do we take decisions? We reach here using the tools. So what are the tools? Out of which the first tool is what we are discussing today, which is financial statements. Okay. Financial statements is going to be a big part of your life if you're dealing with finance jobs, any jobs. Okay. And a very good understanding is important. Then you got quants, then economics now has been summarized and has been made pretty compact. In my time when I was doing my CFA, it was a terrible experience. Okay, because they had taken all the 3 years of bachelor's of economics syllabus and they put it in one subject in level 1. So it was a horror. Okay. So FSA, quants, economics. Quants, basically we are dealing with financial mathematics. Okay. Also a bit of statistics. Okay. So FS, financial statements, quants, economics, corporate finance. Because we are dealing with corporate, so we need to understand how they are structured. How are dividends given? What are the kind of, what do I mean by board, a board of directors? What do I mean by independent directors? What do I mean by NPV IRR calculation? All of that comes under corporate issuers or corporate finance, whatever you want to call it. So these are your tools. And there's one common subject which will be there in all of the levels is ethical standards and part of GIPS. GIPS is basically nothing but investment performance standards. So just like you have accounting standards, if you are managing a portfolio, managing a fund, you also need to have standards of presentation. Otherwise, what will happen? Somebody will present in IRR, somebody will present in CAGR, somebody will present in this way. So to bring all of that, GIPS is what is in fact created by CFA Institute, which has been followed by a lot of fund houses. Okay. So that goes to show that the qualification that you're doing in general, right, is a recognized qualification. There's no doubt about it. Okay. So now let's come back. Any questions so far? Any questions? Any time? Please put it in the chat box, or if you want to directly talk, just raise your hand in the Zoom application and you will be allowed to talk. Okay, please do not think that you cannot talk, you have to take permission. Aisa kuch nahi hai. It's nothing like that. You let me know when you want to speak, we'll speak. Okay, are we clear on this till now?
Sir, as in I have a computer background, so is it possible to cover this up?
Of course, as I said in the beginning, the CFA program, let me put it this way. A lot of commerce students would realize that they don't know anything. Okay. So it is even better if you are coming from, let's say, a non-related background, because at least you will come with an empty mind and then you will be able to clear the exam. It's pretty easy when you do not have any baggage in your mind. Okay. Lot of BTech students do level 1. Lot of BSc mathematics, BSc chemistry people, art students. Okay. So whether you come from any qualification, it doesn't matter. What you need to work in the industry is what you've been taught now. Once you do this, then nobody will ask you about your BTech. Once you do, let's say CFA level 1, nobody's going to ask you about BA. That, oh, you're coming from bachelor's arts. No, because you've done it. Now you've done this. And as you will read now, And as we will discuss now, you will come to know that things are not as difficult as it seemed. Okay. So now let me just erase all the ink on the slide. Okay. Now, how do we prepare for CFA? Okay. So we need to be pretty clear on one thing, is that CFA exam, okay, is not a competitive exam. Okay. Competitive exams are about, let everyone attempt the exam. We will take the top, 5 or 1%. For example, the CAT exam. You do not clear CFA by being the best out of all. That's not how the testing works. Okay, CFA program is not a competitive exam that you need to feed in your mind. So the reason why people will not clear the exam, is not because they were not competitively better than the other one, or probably they did not have higher aptitude than the one sitting next to them. It doesn't work like that. Okay, that's the reason why people discuss so much of pass rate here, but actually CFA exam is more about consistent preparation. What it is trying to test you is on the awareness of the content. So you might be a very high IQ guy, but if you have not spent 300 hours, irrespective of the class, this class, what it is going to do for you is different. If you're just relying on the class, and if you say that, okay, my 300 hours is counted in the class, then you will be mistaken. Okay. So 300 hours of self time spent, which comes to not much actually, 1 hour per day. Okay. And let's say 2 to 3 hours per weekend is enough for you to clear the exam with a breeze. Okay. It is not possible that if a person if he has done this, okay, and of course he has got the guidance from the person who has cleared the exam. That is why you come to the class. So you have come to the class so that you know all of these things. You come to the class so you stay on schedule. You come to the class to get a perspective of the topic. But then after that, you got to go and practice. So this 1 hour per day should be spent firstly on doing first reading of the topic from the core curriculum. Okay. So when we are studying for CFA, we've got so many sources of content. We've got Schwezer, right? We've got Wiley. Okay. If you really want to clear the exam and not have any doubts at the end, whether you prepared it from the right content or not, my recommendation is to ditch this and only focus on the curriculum which the CFA Institute gives. CFA Institute gives its own books in the form of PDF and in the form of, if you want, the physical book. Okay, and you can get it for, if if you're not registered for the exam, still you can get the book. Okay, there are many sources to get the book. If you prepare from the curriculum, believe me, at the end of the exam, when the exam time will be coming, a lot of people who are preparing from Schwezer at that time will be in doubt whether the real exam is going to be like Schwezer or not, whether the real question mock exam is going to be like Schwezer or not. And I've seen this because I've done this at level 1. Okay. And that is the reason from level 2, I shifted on to the curriculum. So that time, nobody guided us that time. Everything was about Schwezer. So Schwezer is good for questions. I'll make it very clear. Schwezer, if you are getting sauce, just do the questions for practice sake. Most likely Schwezer has this big questions. Okay. CFA Institute questions are very small, but they're very difficult to clear. I mean, very conceptual. Okay. So if you keep the habit of referring to the curriculum from the first, believe it or not, there will be a very, you'll find it very easy to clear the exam at the end. Okay. And you will not have to do 10,000 questions. Even if you've done the end of chapter questions, about 1,000 questions, which is not difficult if you're doing 1 hour per day. Okay. 20 questions per day. If you're doing, it's not a very difficult task to complete. The exam will get cleared. So my suggestion to you guys is refer to the curriculum. Okay. Now, how are the questions? So as we move to the chapter today, you will realize how the questions are, because the questions that we will do will be of the curriculum. Okay, even today. So any questions about CFA in general for now from the preparation angle? Obviously, we'll come to the study plan. We'll have a separate session where we will do the study plan individually for every one of you, because every one of you is going to have a different work life. Somebody is going to be in college, somebody is going to have more time, somebody is going to have less time. Believe me, whether you have more time, less time, you have to always understand that the more time you have, you still do the same preparation. So even if you are not working, you might think that, oh, I have so much time, I'll prepare a lot. Trust me, it doesn't work. Okay. You have to fix yourself on 1 hour per day and then do something else. Okay, 1 hour of day of preparation properly is enough. Okay, now let's begin. So we are the first chapter of introduction, financial statement analysis. Okay, let's begin. So when we are talking about financial statement analysis, let's do one thing. Let's see what the curriculum says we should know. Okay, so I'm going to just open. I've also shared the book with you guys at your end. You can open it while I will also just move in here and share my screen. So let's first refer to what the curriculum says we should know in the first chapter. And that is how you should first approach any chapter that you are learning. Don't be in a hurry. Nothing to achieve, right? So look at the first learning outcomes. Okay. This is the curriculum. I hope you can see, right? I hope you can see my screen. Okay. So look here. So the first LOS, we call it LOS, is describe the steps in the financial statement analysis. Remember, we are not learning accounting. We are going towards analysis. So what are the steps in different financial statement analysis? Describe the roles of financial statement analysis. What is the objective, right? This is the part.
Hello, sir.
Yeah, please go ahead.
Sorry to disturb you. Sir, I have opted for financial modeling course. So this message came in my group to join the CFA level 1.
If you want to check the class, you can attend the class.
That's all.
CFA level 1 class.
Okay, so I have to leave, or should I attend this class?
Depends upon you. It's your choice.
Okay, sir. Thank you.
All right. So third LOS is the importance of regulatory filings, right? Remember, whenever you go to an interview and somebody asks, right, what are the various sources of information? How do you analyze a company? It's not just the annual report. Right? And this is also a problem when people are doing financial modeling, when they go, specifically students coming from MBA background, no offense to them, but when they are asked about how will you analyze the company, they just know annual report. But there are a lot of other data which are available in the industry through which actual analysis is done, right? So that is what we're going to learn in the third point. The fourth point is the implications of financial analysis. Okay, what is the so now there is also an issue about, if financial statements are so important, they are prone to be mismanaged. Lot of them. We will take some cases, Indian based cases, where you realize that, I mean, this is scary, right? and describe the information sources that analysts use besides annual and interim financial reports, right? So we'll come to know all of this. Let's start in our summarized presentations, so it's easier to refer to the class. Okay. Let me just share my screen.
One quick thing, Alan. You mentioned that you have already shared the book. Is it in the mail or the chat?
No, in the WhatsApp.
Okay, let me check because I didn't receive it yet. That's why I just
You're there
confirmed.
in the CFA group study, right? Oh,
Yeah,
sorry.
yeah, I am. I am.
I put it in the wrong group. Okay, give me a second, yeah. Okay, now you'll get it.
Yep, it's there.
Yeah. So,
Thank you.
no problem. Okay, so let's start with the first content and forget about the slides. Let's first understand. Don't focus on any of the content right now. Just understand this case. Okay, all I'm going to do is maximum time I'm going to be taking cases to make you understand the topic first so that you get a perspective. Okay. So purpose of financial statement analysis. So let's say if you do not read the annual report or you do not do the financial statement analysis, what can happen? What is the worst thing that can happen? So how many of you have heard about Cox and King's company? It's a listed company in India with a very long history. And if I look at just the history, then you will, because we say no in general that, oh, the company has been since 200 years, so it should be good. Or let's say the company is from this brand, so it should be good. Well, not really, because Cox and Kings is a pretty old company and it went bust in 2018. Let me show you the chart, the price chart of Cox and Kings. This is a company, okay? It's majorly into travel. Okay, now let me share my screen again. Okay, so in the class, what I do is I usually use screener.in, so it's easier to refer. Okay, let's look at Cox and Kings. Okay, so let's put this to max. Okay, pretty long history. If in fact, actually, if you go and find out when it was established, probably it will be in the 1800s, late 1800s, right? And the stock today is, it's not $1, it's 1.75 rupees. Okay, so what happened? Right, everything was fine, right? I mean, let's look at the profit and loss generally. This is the income statement where the company presents its revenues, how much it has earned, and what is the kind of profit that it is making. So if you look here closely, everything seems to be fine. There's no problem as such. In fact, if you see from March 15 to March 16, the revenues have like gone crazy, right? If you see out here, but look at the sales growth, right? Humongous, right? Then what happened? And there are hundreds of cases I can discuss like this. Okay. So, and now, just so that you understand that it is not just, okay, I'm also sharing one report on the group, the WhatsApp group. This is the Cox and Kings annual report. Okay. Please open it and try to figure out whether, just by looking at the annual report, can you actually figure out if there's something wrong.
Sir, we are not there in the group. Can you share the
You're not there in the
screen?
group? Okay, just give me a second. Yeah. Okay, so you don't have to open it also, but I'll just share the screen. Okay, so beautiful annual report, right? Looks like a very professional company. So I cannot go by this face value, right? Can I? all looks very professionally presented. Everything is. How do I take so much information and I analyze the financial statements in a way which not only helps me to make decisions, but also helps me to avoid any companies that might do fraud? That is the biggest problem that we are trying to do. That is the reason why we're actually learning financial statement analysis, to be very frank. Okay. Most of the time, as an analyst, uh, specifically in the buy side, when we're talking about fund side, when we're managing money, the issue is not about, uh, you know, revenues or annual report. The issue is about not even finding opportunity. The issue is not even doing macroeconomic analysis to find out which business is going to flourish in the next 10 years. Most of the times it is about avoiding companies which are stealing your money. Okay. And that happens a lot. For example, if we just look at these three statements: balance sheet, profit and loss, cash flow. What can you understand? You can't understand anything, because the principle of any financial statement presentation is about minimum information at the front, maximum disclosure. That means if you look here, they've shown you revenue. So they've just given you revenue is okay, 6,45,000. Great. Okay. But what are the details of this? So then they've given you note. So go to note 19. So at the face value of it, you cannot analyze much, right? You have to go deep, dig deeper, understand what has happened, ask questions to the analyst or the company management as to why this has happened. Now, in case of Cox and Kings, if we go back to our presentation, I have written the summary on what exactly happened. So basically, what's in a nutshell, what Cox and King management did, and in fact, you'll be surprised to know that who did it. It is not very big people. It is not the CEO. It is not the founder. It is the CFO who is expected to actually manage all of this. The one who actually did the fraud, and you will find the same guy, the name given here, right? Where is the CEO, Chief Financial Khandelwal? Yeah, this guy, Anil Khandelwal, in the annual report itself, right? Where what he did is he took Cox and Kings, he raised some money on Cox and Kings, transferred that money to another company which is not even related to Cox and Kings, which is not even in business relation with Cox and Kings, and from there it again transferred to another company. That's how the entire money of the shareholder gets wiped out. And in 2017, of course, it went bankrupt. I'll give you another example. Again, let's go to screener.in.
This last statement was like we are talking about Sunil Khandelwal was the brother of that one, right?
Yeah.
Okay, I just missed that last one, so ask that.
Yeah. So I'll give you one more example. Let's open, where is my screener.in? Yeah, it is here. Okay, now this used to be a stock in 2013 or so when we used to talk. Okay, and in fact, since we were very naive at that time and we had very less experience and knowledge of financial statement analysis, that time I was actually in one point I was actually invested in this stock, and a lot of people probably have taken the services of this. If you are in the Maharashtra side of India, you must have definitely heard about Talwalkar's gym. How many of you have heard, right? So look at this. So this stock, look at the chart first. Okay. So what happens suddenly that, why these companies, they are operating so well, they've, set up such big businesses. Why would, think about it, don't you think? Why does a founder or the, promoter suddenly become so corrupt that it starts siphoning off money? What they did is they proposed, or they made it look like they are doing a demerger of the company. That's why you will see that there is Talwalkar's Better Value Fitness, and now there is Talwalkar's health clubs. So they proposed this, and we were actually looking at this stock for 2 years, and we were thinking that what is going on with this stock, right? And even the same, and both the stocks, right, went down like anything. And in fact, I think the website does not even exist, right? So what do you think happens? Anybody has any idea why such mammoth level? Satyam, another case. Enron is another case. If you want to talk very famous cases, what do you think happens that people lose their sight on the business and they become, such thieves? Any idea?
Okay, so I'll just share my experience on this one.
Sure.
So basically, we have been talking about all these instances where siphoning of money has happened, and whatever intention was it, like but in the end, it is classified as fraud,
Correct.
right? So
Correct.
when we talk about fraud, there are three aspects. Like either you have the opportunity, you have the pressure, or then you have a rationalization behind that. Because, for example, like somebody will say that company has not been paying me, I was not recognized, so this is the rationale that I'm siphoning out the money, and I own this amount from the company. So these are basically the three reasons that lead to fraud.
Correct. Another issue, if you see, when the promoters are involved, when the promoters themselves do the fraud, is because think about psychologically running a business for 20 years. Okay, worked hard, and now you want to pay out. You want to pay out because you're just bored, you've lost the motivation to run the business, and you just want to take some money and get out of this scheme. And you don't really care. That has actually been most frequently when the promoters are involved, the founders of the company are involved, when the owners are involved, most likely the reason is to just get a payout. Payout in the sense, because from the business they feel it is going to be very difficult. It's going to take another 15 odd years to do very ethical business, and do research, do marketing, do sales. So at that time they become frustrated and they think that, okay, there's an easy way out. Let's take this part and let's come out of this entire scheme. Any which ways, when a company is listed, you've got a lot of work. You have to answer to the investors, right? So this is what happens. But the question out here is, why are we doing this? Is because to avoid this. So that answers the question of the purpose of financial statement analysis is to avoid, practically, if we are talking in nuanced language, is to avoid losing money. Okay. From a very practical angle, I'm talking that usually what the objective is going to be always about either making sure that we do not become the trap of such frauds. Okay, let's understand how this financial statement analysis actually work step by step. Now, remember that this is not how it is actually done. It is not supposed to always be done like this in the industry. It is not always. But if you see the steps which are actually written make sense. Okay. A lot of time, this actually is the problem with a lot of students in research, that they skip this step. So look here, the articulating the purpose and the context based on, basically just set the objective on why you're doing financial statement analysis. Let's say if we are, let's say, going to make a financial model, why? Why are we making it? There has to be a purpose, right? So for example, if we are going to articulate a purpose, so maybe the purpose is going to be investing 10 crores. That is the purpose. For 10 crores, I want to find, let's say, 5 stocks. Okay. Those 5 stocks have to be of this and this. Let's say they have to be in ethical industries, let's say non-tobacco based companies. Maybe I need 5 industries, IT, hotels, let's say aviation. Okay, so I can set the purpose, and also I want to generate 15% CAGR return. So basically, articulating the purpose means setting the purpose on why we are doing this, right? So second is, now since we've done that, now we've decided, okay, so a lot of time usually has to be spent on this. Because imagine if you've not done this and then you go and doing collecting data and all, later on realize that, oh, my purpose is only not set. So then you will have to come back. So if maximum time is spent here, then logical things will happen in the second stage, which is on collecting data. Because what data you got to collect if you don't know what is the purpose? Right? So if let's say we say that, okay, 5 stocks is what we need to look in certain industries, then what is the data that we need to collect? We need to collect, for example, if you're talking about IT industry in general. So obviously the financial statements of the top 5 IT companies is what I need. I need probably the IBEF reports. IBEF reports are reports published on the industry. These are not related to the company does not publish it. Okay. McKinsey reports, or BCG reports on the industry, on what they think the competitive dynamics of these industries are, right? Maybe go to RBI website and get some industry data on that specific industry, on how much GST is getting collected, what is the revenue, what is the growth happening, right? Discussions with the management. Now, for this, generally, when we're working with a bigger setup, you get this access to go and talk to the management. For example, if you're working with ICICI Securities and if you're a part of the sell side team, the research team, then every quarter there is a analyst meet which happens with all the so you if you are an investor, you can join in the company's con call and you can ask questions. Okay, talking to the suppliers, customers, and competitors. Now let me give an example out here, so this will probably make things much more clearer. I'll give you my own experience with a certain stock on how I ended up analyzing that. Okay. Can you see my screen? You can, right? Okay. So let's start. So for example, I wanted to actually invest. So I'm skipping the first step. I'm going to the second step. The second step was about collecting data. So I had shortlisted one stock, which was Titan. I'll give you another example. Maruti. Okay. I had also shortlisted Tata Elxsi. Okay, so let's talk about how the research happened. Now, first, if I want to start with Titan, where do I start? So, of course, what I did is I went to their website and I downloaded all their annual reports. So, how did this help me? This just gave me initially all the income statement, balance sheet, and cash flow, the 3 financial statements for, let's say, 5 years. So, I got this from Titan. Okay. But the annual report does not really tell me how the business is run. The annual report just gives me what has happened annually in that company. And there's a lot of details which probably won't even be relevant. Right. Now I wanted to understand, how is Titan going to survive in the next 10 years? What is different about Titan that it is going to help it survive against all the competitors? I had to read about the jewelry industry. Because if you see properly, Titan's 85% revenue, okay, it actually comes from jewelry. And 50% actually is watches, lifestyle, basically, right? Then you've got, bags, then you've got, wearables, etc., 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 right? So I had to understand the jewelry industry. What is Titan doing different, which probably will also happen in the future? So what I did is I started reading the IBEF reports. on the jewelry industry. So I wanted to understand what is the size of this industry. So I'm giving you an example out here. The numbers might be here and there, but let's say the number was 1,15,000 crores was the total market size of jewelry in general. Okay. So out of this, first I wanted to understand is how much is with formal companies like Titan. So how much of this is in the formal industry? You know, proper companies, PNG, Titan, you know, Malabar Jewelries, whatever you want to say it, right? Bluestone, right? And how much is non-formal or unorganized, right? So and you've got jewelry shops, in every street, right? So it came to understand that 40% is actually with formal and 60% is with non-formal. So now the idea was that, okay, so what exactly is Titan doing? Because if there's a lot of market still with non-formal, right? So then I understood that what has happened is after the GST implementation in 2017, okay, what it has done is a lot of non-formal jewelry, businesses, right, were having a difficult time managing this business because of GST, and hence their margins were dropping. They were not making a lot of money, right? Because of course, sometimes they're dealing in cash, sometimes not a lot of documentation, sometimes they're not even paying GST, right? So as the GST implementation came, running these businesses became very, very difficult. And hence a lot of market share started moving into the formal space. But the question was, how are the formal industry managing it, that is making it survive? So in case of Titan, now in case of non-formal jewelry business, they hold inventory. Inventory meaning they actually have gold with them. They actually have to buy, keep it, and then sell. Titan was not doing that. Okay, so what was Titan doing? Titan was using these jewelers only as a source of inventory. So what they became is they just became the final purchase place, and you could never actually purchase the jewelry in Tanishq. Yes, you could buy, but in a lot of the new brands, it was order first, pay first, and then get the product late. So when you purchase first, designs are there. They've got a plethora of designs. You order, so you're not holding any inventory. So your working capital is free. That means you have more money to play with since your money is not stuck, right? And hence they were using that money which the customer is paying in hand. So you're going to let's say a CaratLane store, you're paying upfront 14,000, let's say for a ring. You bought a ring at 14,000, but you didn't get the ring. The ring will come later. So in fact, they don't have to hold inventory. That is what I mean. Right? Plus, so this was one source of information that I got digging through the IBF report, right? The second was to understand that, okay, if this is true, how is it, what are the competitors not doing that Titan is doing? So again, just researching, and I came across a report. This is not even published by the company, okay, that in fact the main purpose of Titan acquiring CaratLane was not for the business, right? It was for data science. Because CaratLane was managed by two young individuals who were not even part of Titan, and Titan later on became investor in CaratLane, was because they wanted to take the data science which they had been using behind the CaratLane application. So if you went to CaratLane shop, you would get a 10 to 15% discount more, okay, when if you had purchased through CaratLane, because it was using all the data to understand your preferences. And in fact, today, CaratLane's designs, and in fact, now the entire Titan's designs are actually done on the basis of data science. Okay, based on your preference, based on what you search, what you like, what you don't like, uh, when is your anniversaries, what have you purchased earlier, all of that. Okay, so that's how I came to the second step, right? Now, after this, what did I do? Now, so I understood all of this. This is the second step, collecting data. Okay, but the issue is again, I have the income statement, balance sheet, cash flow. Okay, I have read all the other reports. Now what do I do? So now let's go back to the presentation again. Okay. So now it is about processing the data. You will, so this is how you actually even, even if you're learning financial modeling, first articulate the objective, collect the data, and now what you're doing, you want to process the data. Okay. I hope I'm making sense, guys. So third step is processing the data. Now, what do you want to do? You calculate all the income statement, balance sheet, cash flow. Now you want to analyze them. How will you analyze them? You would want to calculate the ratios. You would want to calculate, some common size analysis to understand, okay, what is the margin? So for example, again, just going back to screener.in because it's easier. Okay. So let's say in Talwalkar's case, what would processing the data mean? So the processing the data would mean to look at, okay, so what is the, okay, this is really not a good example. Let me take, because we don't even have data. Let's take some other company. Let's take Titan only for that. Okay. So let's look at processing the data and looking at, okay, in how many days does the customer actually pay you the money? And see, this is why Titan is actually very good, right? Look at the debtor days out here. Debtor days basically means that once you have let's say you have sold a product, in how many days do you get the money? That is called as debtor days. And inventory days is the amount of days in which your inventory gets sold. So please understand days, since all of this is going to get covered anyways in the future chapters. I'm just giving you a brief idea on what I mean, right? So calculating ratios, okay, looking at the returns, how efficiently is the company utilizing its capital? So return on capital employed. So for every 100 rupee that they're putting, how much return are they making? So that is return on capital. Then also looking at some related data on who are the promoters, right? Have they reduced their shareholding over time? All of this would fall under the uh, processing part of it. Okay. Now let's go back. Any questions so far, guys? I'm going in very slow for the reason so that, and all of the information that I've given you is not a part of the curriculum. The reason why I'm giving you is so that you never have to memorize all of this. Okay. Then we are analyzing and interpreting the data. So on the basis of, let's say this, I created a financial model. Okay. I created a financial model. I did the valuation. And now after that, what I'm doing is I am communicating my results in the form of, let's say, the equity research report only. Okay, so let's show you some of the equity research reports. Open up your Google, okay, and just write equity research report on Titan. Just type Titan and you will get many examples. Majorly, if you want to look at any of the research reports, it's better to look at trend line. I'll show you. Okay. So trend line is the website where you can access a lot of equity research reports like this. So let's look at one of those. Okay, so this is basically the final outcome. So all of this process ends becoming this. So analyzing and communicating a result. So they've given an entire guidance on. So they've created the model, they've processed the data, they've set the context, and now they are giving you the final value, which is target price, current market price, 15% expected to increase. The recommendation is to buy the stock. Are we cool? Are we understanding, guys? Any questions? Please raise your hands, or don't raise your hands, just ask your questions.
Alan, just quick thing. When we talk about this framework, all these 6 steps, so is this from the perspective of a business analyst, or this is from the perspective of an individual who is looking to go for an investment in this organization?
No, we are talking more from an investment angle at an institutional level. Of course, you can use it for an individual also.
Okay.
The objective is that we are working in an investment bank or a fund, or let's say the treasury department of a company. And we're doing the same thing, right? Because see, out here, the decision that we're taking is for a stock. So stock can be for investment bank, sell side, equity research, broking firm, right? The other can be if you're a part of, let's say, the corporate finance team and you have to decide on a certain project, nothing would be different.
Why I ask this question is like, no, when we go to the first step, articulate the purpose and context. So, like, no, now as an individual, I will have my intentions and motives. For example, you stated that I don't want to invest in a company that has any attachment with tobacco or alcohol.
Correct.
Right. Now, when I look at from the perspective of a business analyst or an investment banking analyst perspective, this might be very different.
Investment banking, no, investment banking obviously will be the same purpose only, because I can set the other purposes. I want to acquire. Let's say, I'll give you an example of investment banking. Let's say if I say that we want to acquire, or we don't even want to acquire, we want to increase our market share in the jewelry market, mostly geared towards, let's say, female between 19 to 25. And we want to increase the market share by maybe doing an acquisition, right? And the company has to be, let's say, minimum 50 crores revenue, has been in the market for 10 years. That could be the purpose for investment bank, right? Specifically in M&A side. The another example. Yeah, good. Yeah.
What will the basis of this first step? Like, I just bank on the mission and vision of the organization.
No. We are talking about every time. So, no, we're not talking about a business as such. We're talking about every time we are approaching financial statement analysis, right? It can, so the larger context can be very different. You're a part of a company and the company's vision is different, but the company might say that, okay, I want to invest this surplus amount. So again, for that surplus amount, we'll have to start out here, right?
Like,
Talking about business.
I will have my intentions clear, like why I want to put my money in.
Yeah.
So I will go with that vision.
Of course.
Right. Okay.
That'll be different for every case. Right? It can be different even for a project.
Okay.
Right? Because project also, you're putting capital and you're getting returns.
Understood. Okay. So my purpose of investing money is from where I start.
Of course. And it has to be, see, as you will try to make it more and more detailed, you will answer more questions. For example, at the first, you might just say that returns, but what returns? How many returns? What is the risk? How much risk you're willing to take, right? Well, even if you're willing to take this much risk, how will you quantify it? Is it going to be 30% drawdown? Is it going to be 40% drawdown? Or are we even going to look at drawdown as the parameter, or should we look at standard deviation? So articulating the purpose can be different for different situations. What I discussed is more from an investment angle, but you can obviously replace it to any other situations, right? Okay, let's move forward. We have already discussed all of this. Okay, so briefly, if we have to summarize, you can use this financial statement analysis for valuing a security, which we discussed. You can also use it for credit rating. Okay, so I'll share with you again in your WhatsApp groups. The CRISIL has actually given a CRISIL rating system. Okay, not just the ratings directly, right? So for those who are new to this, I'll just explain what I mean. So wherever we are talking about a company, right? Let's say we are talking about Titan, or not. Let's not even talk about Titan. Let's talk about, let's say, my name. Okay, so whenever I want to, let's say, take money, let's say I want to take a home loan, let's say I want to take a personal loan, right? How would the bank know that for certain, or there's a higher chance that I will repay, right? So it has to do with your history of repayments. That means earlier I had taken loan, let's say I had taken loan one, I repaid all EMIs on time. So let's say I had a credit card, let's say never, zero defaults on payment. So in Indian terms, you might be able to understand that there's something called as CIBIL, right? So, upwards of 700, 800, right? It's a very good score. So how does that good score get used? That when you go to the bank, right, you get higher loan, lower interest. Mota-moti, right? Very, very broadly, we could say that this is what is credit rating in case of an individual. The same applies for companies also, right? So CRISIL might come up, do the same analysis based on, obviously, because individual is very simple to analyze, just repayments and payments, right? But when we're talking about, let's say, a company, you have to go a little more deep, right? Details. So you have to look at suppliers, you have to look at their financial statements, you have to look at their capacity to pay, you have to look at their previous debt that they've taken. You have to also look at the sustenance of the business, because you are concerned whether the company will be able to pay my interest and principal on time or not. And I think we don't have to take much examples. Right from 2008 credit crisis is the biggest example on what happens when such things happen. Or let's say Kingfisher is an example of that, and many such cases, right? So credit rating, what CRISIL, so there is these rating agencies like CRISIL, which will, so basically it's a little counterintuitive, but actually Titan would actually approach CRISIL to get a rating. So that is where the 2008 entire conflict of interest happened, because the company is actually, approaching the rating agencies to get a rating. And in return, obviously, the company is obviously paying amount, right? So what is the reliability of this rating? But any which ways, CRISIL will give ratings like double A, triple A, which means very good, right? BBB would be, let's say, investment grade, right? And so on. So the terminologies can be different, but basically what it means to say is that whenever the company is going to go and raise debt in the market, if you have a triple A rating, right, it is going to give you lesser interest, but there's going to be lesser chances of default. In fact, we can see some of the examples out here, or maybe we'll see it at the end. Okay, let me see if I can show you some listed corporate bonds. Okay. So for example, I'll just share my screen. Oops. Yeah. Okay, so something like this. Right. So these are all various banks, companies, right, which come to the market and they say that, okay, we are ready to give you 5.49%. The interest will be annually and the bonds will mature in 30th September 24. So ICICI Finance has a AAA rating, it is giving at 8%. Right? So something like this. I hope some perspective must be made for people who are new to this. Okay, always check things what you are learning. So that later on when you refer to the content, you will not struggle much.
So this rating is only applicable for the listed companies or for the private firms?
Private firms also. There are SME ratings also are there. Right? Small and medium scale enterprises which are there. Those also get their own rating because they also want to raise debt, right? Okay.
Sir, if a startup want to raise money who have no financial statements available with them, so basically they are going for a seed fund. So on what basis they are allocated the money?
Okay. So if you're talking about a startup, okay, usually that startup seed fund, ये सब जो terminologies we heard obviously happens with some, but mostly people when they start with their own money, right? So when VC or an angel investor is initially looking at a business opportunity, he will first not even look at your financial statements because you don't even have anything, as you rightly said. I mean, what do you have to show, right? What they would actually be more interested is in looking at the product itself, and they are usually looking at how will I exit from this opportunity. So because they know that if I today give you 5 crores, if you need 5 crores, first of all, what are you going to use it for? Second of all is, if let's say I exit, how many times do I make money? Okay. So they have been there in the business for long, so they know how to identify such opportunities. And even then, they are not looking at only one businesses, so they will spread their opportunities across 20 such startups. Okay, and they know that probably 18 are going to fail. They already know that, and it's not always going to be because of the product. Okay, sometimes it's just going to be because of the change in the circumstances of the business, competition, etc.
So basically, it's all instinctive, not any analysis.
At this stage, more analysis is towards the opportunity. For example, let's take an example. If today somebody comes and tells you that I'm going to create a social media app like Facebook, where it is not going to be about me sharing, writing anything, it's just going to be about images. I'm just going to share, click a picture, share. Right now, what do you think as a VC or an angel investor? What would you be thinking? Would you be thinking that what? I mean, how are you going to compete against Facebook, Instagram, and let's say Snapchat and Twitter? So what do you think? I mean, would you be interested? Because
Basically, no.
very difficult, right? And it has to be an idea. So the more, what financial statement analysis should I do? Nothing, right? All I'm trying to calculate is that, okay, fine, I'll give you 5 crores and you don't come back to me asking for more money. So this is, let's say, this is the angel investing part, right? This is stage one. I gave you 5 crores. And at this stage, most likely I will take a huge stake from you. Because why
Yes.
should I take that kind of risk if you are not going to give me a large stake, right? So probably I'll take, let's say, 40% or 35%, whatever, right? But I'll not take the controlling stake. Controlling stake means it is more than 51. where I can then control how you work, right? So Angel, I gave you 5 crores. Now my idea is that if the idea is still scalable and is sellable, then my idea is that I know that there will be a second stage. There will be a second stage where we will again raise money. So usually this person is very good at raising money. So he has a background of IB, private equity, whatever you want to call it. And also that background of the product that you're talking about. Okay. So at the second stage, he will get, maybe he will raise 150 crores. And the idea is either he will sell part of this 5 crore out. So out of this 40%, he will keep. The angel investor idea is to keep 20% and sell off 20%. So there's an exit plan.
Oh,
Right? And there will be a third stage in which will be like, usually after this, it should be an IPO, but nowadays it doesn't work like that. There can be n number of stages. Okay. So next, the idea could be, okay, we're going to raise 1,500 crores. And this time we're going to get SoftBank. So again, the valuation is going to increase. The idea is to keep on jacking up the valuation until the IPO happens. Of course, now, once you reach this stage, and this stage, you will have some financial statements and you will have to start managing it well.
yes.
So Zomato is an example of gross mismanagement, right? So all of these stages happen, and then at the end, the business itself does not have much of any sense, right?
Sir, if there are n number of stages in an investment in a startup, right? So if the first angel which have invested in the 5 crore of 40% equity in the company, okay, and maybe in the third round he saw that there are 1,500 crores investment coming up. So if he want to quit over there, then he will sell his, yeah, he will sell his stake off.
Of course, it's good, because at this stage, probably the angel investor will not even be in the process of raising money. He will be mostly towards, because then investment bank would take over.
Yeah.
At this level, it is managed very professionally, right? So there will be huge companies which will be a part of managing this kind of capital. And then, of course, after this, either you can just, and usually, but the angel investor will not do that. Because if he knows that it has reached till this stage, he knows that IPO is going to happen. See, IPO is not going to happen at 1,500. Maybe it will happen at 6,000.
Yes.
Right? So you can look at, in fact, if you just go and Google and type Zomato funding series, you'll and see the valuation, how it has increased. Right? I'm not saying this is the way it should be. Okay, but this is the way it is happening. And none of these businesses are actually doing well. Go and check the financials, you'll come to know. Okay. So determining the credit worthiness of the company, making an investment recommendation could be one of the objectives. Debt rating to a company, which is the same. We discussed the venture capital part on how it happens. Evaluating or a mergers on an acquisition candidate. Possibly, right? If let's say Vodafone and Idea were merging, so there must have been an investment bank or a firm which was analyzing whether this was a good idea or not, right? So that could also be, I mean, there are hundreds of examples which we can take of the scope of financial statement analysis, but from the purpose of the content, of course, this is what the objective is. Okay. So now we are just shifting gears out here and talking about financial reporting. Okay. So now, whenever we are talking about financial reporting, you have to understand that accounting as a field, how it works, and analysis as a field, what we're doing. So accounting, let's say if, let's talk about an Indian chartered accountant. Okay. So he's a chartered accountant and he has a signing authority, right? What does he do? So I have a business, let's say I have Mentor Me Careers, right? So annually, I am supposed to get my financial statements audited. Okay. First of all, obviously created, audited, and then submitted to MCA, Ministry of Corporate Affairs, right? Every year. Okay. Now, what is the chartered accountant doing here? So every month, let's say I let's say I traveled to Mumbai. Give me a very practical example so that you understand what we're doing, okay? And I spent, let's say, 15,000 in, that is 1,50,000. That's too much. 15,000, let's say, on travel. Okay. And travel plus hotel, let's say. Now I come back. I come back to Pune. Now, what I do is I take this bill with the GST and I put it in my, let's say, whatever accounting software. Now what happens? This is where the chartered accountant comes into play. At the end of the month, he will ask me whether this trip was related to business or personal. Okay. That is where a lot of people siphon off money. This is how they do, right? Even in bigger businesses, they will take all their personal expenses and put into personal. But of course, if it's a good CA, he will make sure to understand. He will ask you two questions. What business? Were you traveling, or have you also included your family's expenses? Okay. If it is not a business expense, he will say, I will put it in personal. That means you do not get to put it in the company's expenses. Right? So it has to come under expenses. Now, which expenses? So expenses can be many. It can be related to service. It can be related to travel, fuel, marketing, whatever. So now putting it in the relevant category, making sure that you're putting in the relevant category, making sure properly we are claiming the GST, etc., becomes the part of financial reporting. Okay. So now financial report, whenever it is made, again, let me continue talking about this. So my CA is there, let's say. So the chartered accountant which handles my accounts, let's say, is making according to, let's say, Indian accounting standard, Indian AS. Okay. Just taking an example. Okay. So Indian accounting standard, if you go and check on Google, there's an entire list. It's a PDF. It has its rules on what to do with a certain expense, what depreciation to take, how the revenue can be recognized, which expense can be recognized, which cannot be. Right? So there are rules that are getting followed, obviously, which the Indian accounting standards authorship would come under ICAI. Right? Now, what is the job of the CA is to make sure the Mentor Me Careers is compliant to these rules. Okay. And making sure that it is happening on time, the data is fair and it is accurate. Timely. It has to happen timely. If I take my financials and I present it after 3 years, it's of no use. If I am putting my personal expenses out here and then showing my profit margin, then it is not fair. Right? If I am not accurately putting the various expenses in the proper category, then it is not accurate. Imagine if you were analyzing a company and none of these things are getting met. right? So the CA, the chartered accountant or financial reporting in general, is making sure that data gets presented timely, fairly, and accurately, specifically in the public domain. And we are talking about a bigger company. Okay. Now, in the global level, it would be CPA, but we are talking about IFRS, international. So India has, what it has done is it has created a version of its own called as Indian Accounting Standard, which is based on IFRS. Okay, it is based on IFRS. IFRS is what? It is just like how you have various rules of accounting, the same international financial reporting standards. So, international financial reporting standards. Okay, mostly the world is going towards merging all the financial, because imagine if you had to do cross country investments, you will not even understand the financial statements because one is using another standards, other using other standard. So in order to get all of that, IFRS was made to make all of it in one standard. Okay. However, as global as we may think, US is the last one actually to do. US is still following US GAAP. Okay, US generally accepted accounting principles. Okay, but in any case, we are understanding that what we are trying to understand, this is financial reporting. So we are not a part of financial reporting. We are a part of whatever report gets made to analyze it. Right? Any questions here, guys?
No, sir.
Okay. Let's move further. Okay, now let's look at some of this would be interesting for you to understand that the various regulatory authorities. Also, please understand there are two kinds of, in the curriculum also, there are two kinds of agencies, you can say. Okay, there are bodies and then there are regulators. So in case of India, the regulator is SEBI RBI. That's the regulator. Okay. The bodies which create these rules not necessarily will be SEBI. So for example, SEBI is a part of IOSCO, okay, which is a global consortium of all the regulators who join to make sure that the markets are fair. So let me show you, which a SEBI is also a member of. Okay, so let's just open our Google. Where's my screen share? Okay. So let's open IOSCO. IOS. That's okay. So International Organization of Securities Commission. It does not have any regulatory authority over the world. Okay. But it is all the regulators come together, become a member of this, and then they discuss all the various issues in the markets and they come up with new rules. That's how they come. Right. So, for example, there might be some new understanding or learning that SEC, like you have SEBI in India, in US you have SEC, Securities Exchange Commission. So they might share some learning with SEBI, right? And that learning gets implemented out India. There might be some learning which we might come to know in, which SEBI might understand in India, and that learning might be passed on. So that's how, that is what ISOCO, which even the SEBI is part of, right? So for example, you can see here the category of members. There are 33 associate members, which of which even the SEBI, Security Exchange Board of India, is a part. Okay. So you can look at, if you want to, whenever you get time, to what these are. What are the various, how does it work? From the curriculum perspective, obviously, is not required. But just know that this is IOSCO, which basically all the regulators come together and they discuss on coming up with new rules and regulations for their capital markets. Okay. Whereas the standard setting bodies, now let's come back to the standard setting bodies. So one of the bodies is, of course, IOSCO, which is like a membership for the regulators. Okay. Then you also have the standard setting bodies like FASB, okay, which creates the US GAAP, or IASB. Basically nothing but the standard setting body which creates these accounting regulations, but they do not have no authority to implement. They cannot, they don't have any power to go into any country and say that, okay, let's start. Can't do that. Okay. The regulatory authority is SEBI. So SEBI does not set standards, but it implements the various rules and regulation. But you should know that SEBI has the power to bypass all of these standards and add rules, because it's a regulator. You can do anything. Okay. Any questions, guys? So here, there you go. The Financial Accounting Standard Board is the standard setting body for creating US GAAP. So it does not have any authority. It is just a standard setting body. It creates, like, just like ICAI. ICAI does not have any power. The power is by SEBI, right? International Accounting Standard Board creates the IFRS, again, standard setting body. It creates how these income statement, balance sheet, cash flow will get made. Okay. So we have discussed this already. I am just discussing first and then showing you the slide. Okay. So there you go. What is the objective? Protect investors. Okay. Ensure fairness, efficiency, and transparency in market and reduce systematic risk. Now, let's discuss this first. Let's discuss what is systemic risk. So, one is whenever you are investing in, let's say, Titan or TCS or Maruti, let's take different examples. What if people's preference for jewelry changes and people don't wear jewelry anymore? Right? That's a business risk. What if the regulations or the way softwares get made changes, and hence TCS did not develop its system in that way and it loses its business? Or maybe Maruti becomes very slow in adapting to EVs. These are business risk, business specific risk, right? Or let's say the CEO changes and the new CEO which was coming was not trained in the Indian markets. Business risk. All of this can be diversified. If you invest across companies, this risk can be minimized. Systemic risk is when we are talking about 2008 crisis. So 2008 crisis, what happens? The whole industry itself had a flaw. So let's start and give you an example out here. How many of you understand 2008 market crisis already? Let me know. So this is how it started. Okay. Briefly, I'm going to tell you, otherwise it's going to be very long. So let's say there's a company called as ABC. Okay. And then there is individual is John. As an individual, this is a company. Okay. Now, ABC, of course, let's say ABC is a company which is making real estates. Okay. So what it did is, obviously, in order to develop, it had given debt, right? It raised debt. And in this debt also, there are investors. This is fair, no problem. Now what happened is, this real estate houses are available for purchase. Okay, just like in India, there's a real estate boom that has happened, and John, and then there's Mary, and then there is, let's say, there is Sunil, whatever you want to call it, right? So John has a very high CIBIL score. Example, she has a medium, she has low. So John buys the house, no problem. Mary also buys the house, questionable. And then Sunil also buys a house who has a low CIBIL score. Now, all of this is creating, so they've all taken debt. So this is debt / home loan, right? Now, these home loan is obviously with the bank. The banks, or you might say, why will the banks hold this debt? So what they will do is, they came up with a brilliant idea. They thought that, okay, let's convert this loan into bonds. Hundreds of bonds. Okay. Because if we keep it in the bank, then, we will have to do all the work of receiving the capital, and then, calling the person that please pay the EMI on time, all, etc., 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 right? So what they did is, they took all of this, converted into bonds. Okay. And then let's go to the rating agencies and let's give them rating. Whatever you want to call it, CCC, DDT, right? So initially when they did rated the bond, it was fine. So it was like, okay, AAA is of John, BB is of Mary, and CCC is of Sunil. But then they were like, okay, fine, this is fine. But the issue is that then we will not be able to raise a lot of money, right? I mean, still, because we're not able to make a lot of margin because of that. So maybe what we could do is, let's combine people like Mary, maybe plus 500. Okay. And then let's again create another bond. Okay. See, because if we combine many of Mary, then maybe the rating can increase for Mary's tranche or Mary's kind of bonds, right? Now, the issue is, all of this happened. I mean, I can keep on going ahead, but the issue is that on the other side of it, the people who understood this, they created something called as the credit default swap, which said that, okay, John defaults, if John defaults on the debt, then we make money. If they don't default, I keep on paying the premium, right? Premium in the sense, I will go to a bank and I'll say that, okay, I'll give you 500 rupees every month. As long as John does not default, no problem. As soon as John defaults, I'll make a lot of money. So it's like a call option or a put option. Okay. If you don't understand, not a problem. Now what happens is, once people started, obviously the real estate prices also went down, plus people also started defaulting. The entire market came down. That is systemic risk. So where did it start from? From issuing debt itself to Sunil, because the market had become corrupt, right? People wanted to make more money. People wanted to take more debt. And hence, if you see from that point onwards until 2000, let's say 14, 15, the banking industry is just doing catch up with regulations. There has been regulations after regulations after regulations. And that is the reason you actually saw companies like Paytm come in the market. Otherwise, they wouldn't have come. The reason why a lot of fintech companies came in India or got they started in a lot of countries is because since 2008 till 2014, the banks were busy complying to regulations. Because at the same time, concepts like Paytm, whatever you want to call it, plus 100 apps came up. And as soon as the banks came in picture, again, now these are gone. So that's pretty interesting, right? Because you also saw a lot of NBFCs coming up in the market. NBFCs sub brokers also coming in the market and taking loan. As soon as now the banks were freed of the regulations, now all of these NBFCs are gone. Right? So that is systematic risk in short, not in short, but yes. So the core objective of IOSCO is to create fairness, efficiency, and transparency in the market. Okay. So now again, what is as I said, information has to be full, complete. It has to be accurate. And the main issue is timely disclosures. So if a company, if we are, let's say, finishing off a year in March end, right? How soon the financial should be? For an investor like me, probably the information should be available by April itself. At least even if it is unaudited, give me the financials. So timely, because if you give me, let's say in October, and a fraud is happening behind, my money is gone. Right? So financial statement should be of high and international acceptable quality, agreed. Okay. Now please remember that do not try to remember any of specific names because those are not really tested in the exam. What is tested is the concept. Okay. So for example, now we'll also discuss what is 10K, 20F. These are all, things which are filed by companies in the US. Okay, along with the annual report, along with the income statement, balance sheet, and cash flow. These are all the forms which have to be filled by US companies. But you don't really have to remember specifically. And any which ways we cover this so many times in financial statement analysis that you will eventually recognize and remember this. Okay. Now let's come to any questions so far, guys.
Just one thing. We just spoke about the bonds, right? So, what is the basic difference between a bond and a debt?
So a bond is when debt. Let's say I took 100 crore debt, right? So when I'm taking a debt, I'm going to the bank. Majorly, I'm going to bank and I'm taking debt. When I'm taking a bond, let's say 500 crores, I can either go to many companies. I can split it out. Let's say this 500 crores is 1 crore bond per unit, and then sell it across to investors, companies, whoever I wish. Right? So bond has certain obligations which you have to fulfill. Debt, bond in general could be classified as a part of overall debt. It could be a way of actually raising capital. So you can raise debt through bonds. You can raise debt through debentures, money markets, whatever you want to call it. So it's a general term, but this basically tells you the way that I can raise it.
So just an instrument to raise the money, right?
And bonds also are different types, right? Then you have got zero coupon bond. Then you've got bullet structure. So many types of bonds also, right? Premium bond, discount bond. All of that we'll cover, but at the moment, just understand it's a way of raising. It's an instrument, as you rightly said. Clear? Any questions, guys? Sanat, if you have any questions, please let me know.
No, sir.
Clear? Okay. Now let's come to the 3 financial statements. Now we're finally getting into financial statements on what they are and what they mean. Okay. A lot of things will be explained here, but I'll try to explain you in my own way so that you understand. So let's say in 2025, we start a business, okay, let's say we are selling second-hand cars. Okay, the business is of selling second-hand cars. Now, so first we go and get an inventory. We speak to a lot of customers who want to sell, right? So we get an inventory of, let's say, 100 cars. So we have not really bought the car to sell it. We've just spoken to a lot of owners who want to sell their car, and we put the car on display on our showroom, right? So that is the initial step. Then we obviously we create an office, or you can say a showroom, where people can come and speak to us. Then we hire some employees, let's say 2 of them, at 50K per month salary. Okay, and we are also having an office, so there's rent, then there's deposit that we have to pay, right? And then we start, customers start coming, and then we start selling cars. So we sell about 50 cars, sorry, 50 cars at a market value of, let's say, 5 crores total. Okay, and we generate 10% commissions. Okay, so now let's start on what is income statement, balance sheet, cash flow, by understanding all of these. Okay, so whenever we are talking income statement, it means specific year. It's also called as the statement of operations for a specific year. So whatever we did in terms of generating revenue minus expenses is equal to profit. Anything that fits in this category for specific year 2025 would fall under income statement. So think about what are the things specifically which generated revenue, which generated expense for a given year, and created profit also for a given year. So if you filter it out, rent. If I pay, let's say, 6 lakh rent for a showroom, am I paying it for using it this year or future years?
Current payments.
Correct. So all the expenses, so rent would be a part of the income statement, right? Deposit. What about deposit? Am I paying deposit for a given year, or am I paying deposit for accessing or putting it as a security deposit, or there is a chance that I might get the deposit back? Think.
Chance of getting a deposit back.
So it is not for 2025. So deposit, it's not for 2025, right? Is it for 2025? No. What if I'm staying here for 5 years? Then it is for the 5 years, right? So anything that does not fall here, or which is for more than 1 year, would come under balance sheet. So deposit would come under balance sheet. Where it will go, how it will go, we'll discuss later. You're just understanding the basic idea behind the 3 statements. Okay. If we have 2 employees whom we are paying 50,000 per month for a year, so maybe salary, if you want to say, is it for a specific year, or are we saying that we have given the salary for 5 years? For a specific year. So salary would also be a part of expenses because it is for a specific year, 2025, right? Okay, now inventory. So have we actually purchased the car?
No.
No. So there is obviously no chance of putting it in the balance sheet.
No.
Right?
Only the sales.
Yes. So out of that 50 cars we sold, we are going to make 10% commission. So now think about it. This 10% that we are making, 50 lakhs, right? Is it for a specific year or is it for more than a year?
Specific.
So then that would come as revenue and also profit for a given year, right? So whenever we are saying income statement, it is for specific period. Don't even say year, it's period. Balance sheet is cumulative. Okay, so let me give you an example out here. So this is how it would look, the balance sheet. Okay, and this is income statement. And let's say this is 0, 1, 2, 3. This is also 0, 1, 2, 3. Okay, so let's say you created revenue of 50 and let's say you had 40 of expenses. So you made a profit of, let's say 10 CR. Okay, so this is for a specific year. Again, you made 5 crores here. Again, you made 2 crores here. Let's say, just taking example. Now, this 10 crores, right? You made a profit this year, but the balance sheet has to show how much profit have you made until year 1. So profit until year 1, profit until year 2, profit until year 3. So you would say, okay, until year 1, you made 10 crores, but then until year 2, you made 15 crores. Until year 3, you made 17 crores. So it is cumulative. So whenever you are opening any balance sheet of a company and you're looking at 2025, all the data is cumulative before that. But whenever you're looking at income statement, you're looking at specific year, and the same goes with cash flow statement. Now remember, why is there a need for cash flow statement? Again, please understand that now let's say revenue we said 55 crores, right? We sold 50 cars and we earned 10% commission. इसमें से in out of this, let's say 5 crores, let's say 2.5 crores customers paid you in cash in the sense at the moment. And let's say 2.5 crores people said that they will, give you after 1 year. So now, whether you are getting it after 1 year or whether you got it in cash today, in income statement, you would still recognize that as a revenue. Why? Because income statement does not follow cash accounting. It follows accrual. What is the meaning of accrual? Accrual means that revenue is recognized not when cash is received, but when the risk is transferred. So I've sold the car. He has taken the car. Or I have signed a contract that makes the car now, the owner of the car is the other person. Okay. So let's say you go to a shop, you have bought the laptop, you may be paying installments, but the risk is transferred. So at the point of sale is where the revenue is getting recognized, not when cash is recognized. So hence, income statement is not cash. It is not cash. Okay. Obviously, if 2.5 crores you're going to get after a year, then in the balance sheet, you're going to put it as 2.5. Then you need to know that, okay, this part of the revenue I'm not going to get today. So hence, we need the cash flow statement to use. So it is going to use the balance sheet and the income statement together to convert all of these activities into 3 major parts cash flow from operations, cash flow from investments, and cash flow from financing. Basically converting all of these activities, whether in balance sheet, whether in cash flow. Okay, and it is going to convert it into cash. So for example, out here, if you said that you have earned 50 crores, 5 crores as revenue out here in, let's say, 0th year. Sorry, yeah, 5 crores, right? Now, the job of the cash flow statement is to find out that, okay, in reality, how much did you earn in cash? So what it will do is it will calculate 2.5 crores as cash flow from operations. So that how it will do, we will come to that. We have a great exercise, Excel exercise that we'll do later on, which will clear out on how to do that calculation. For now, just understand the meaning of these three statements. Are we clear?
Yes.
Okay.
Yes, sir.
Also, whenever you have to summarize, always remember that in one statement, now that you have understood it using examples, please always, specifically in interviews, understand that balance sheet is at a point in time. Or you can say position. Okay, because cumulative, right? This is during a year, during a period. And this also obviously during a period. The statement of changes in owner's equity is because in the balance sheet, in the equity side, okay, equity means owner's money. So if I have started a company and I put it 100 crores, that's equity. But all the profit that is coming to me, right, from the income statement, in the income statement, we are making net profit. That profit every year is coming into equity in the form of retained earnings. We will discuss this in the future slides. So just for now, just take it in the face value of information. Do not worry that I don't know this. All of this is going to get covered. Okay. So all of this every year is going to come out here in the form of retained earnings. So now a detailed statement regarding the statement of changes of owner's equity is published separately in annual reports, which can be, if you want to understand, right? So it is given beginning equity is how much, then how much was net profit, then how much is changes in retained earnings, etc., etc. So the breakup of the equity part of the balance sheet is nothing but changes of statement in owner's equity. Okay. Now let's discuss upon, I think we have already discussed this, but now let's put it into formal terms. Okay. So a balance sheet, okay, it's very easy to understand actually, because if I say a company can either have assets, liability, or equity. Take any example. For example, if you have earned profit, it would come under equity. If you have taken debt, it would come under liability. If you have cash, it would come under the asset side. If you have inventory, it would come under asset side. If you have taken advance money from someone and you have not given the service, it would still be under liability in the form of deferred revenue. So what I wanted to discuss out here is, what do this mean, right? So what the company owns, owes, okay? And owner's equity, what the shareholders of the company own. So, if you think about it, you should ask yourself that why is equity on the liability side? Think about it. We have two sides, asset, liability, equity. So why do we put equity on the liability side? Why is this equation like this? Asset is equal to liability is equity. Any idea?
You may face a loss.
Yeah, but okay. Now let's talk legally. When we are talking in legal terms, right? So whenever you are setting up a company, let's say my name is Alan and I have set up MMC. Okay. So I have a different PAN. MMC has a different PAN. So are we same?
No, different entities.
It's a separate entity. This is a separate entity, or this is a specific individual. So if I am giving money to MMC, let's say 100 rupees, right? MMC has to put in the fact that it owes me 100 because MMC is a separate entity, right? Just like debt. In the same context, think about it. My owner and the company are different. That's the reason why owner's equity is on the liability side. This is what you need to understand. Okay. Sometimes in the interviews, they ask you this question. Why do you think the equity is on the liability side? Right? Okay. Any questions, guys?
No.
Okay, let's come here. I think we have already discussed this. Okay. Now let's understand what are footnotes. In fact, at the start of the class, I had shown you footnotes. Okay. So whenever I'll first explain it here, then I'll show you a live example. Right. So let's say I'll draw the entire income statement. So we've got revenue, cost of goods sold, then you've got gross profit, then you've got SG&A, then you've got EBITDA. Okay. Then minus DA, then you've got EBIT, minus I, then you've got EBT, then minus tax, then you've got PAT. So whenever any statements are being presented, as I said, minimum at the presentation. Okay. So all kinds of revenues, whether it is jewelry, whether it is bags, whether it is skincare, all have to be combined together to show as revenue. All kinds of costs related to generating this have to be clubbed into cost of goods sold. So minimum whenever you're watching it, minimum information, but maximum disclosure, right? So how does that happen? You look at the footnote. So every such line item will have a note presented there and it will have a number. So let's look at it. Let's look at the Cox and Kings annual report. Yeah. Okay, so come here to income statement, right? So can you see that note number 19? So revenue from operations, we want to understand where you got it from. So that footnote is given. So let's go to footnote number 19. Okay, so here you can see 11, 12, right? Keep on going. There you go. So they've given sale of service and other operating. Of course, this is not a very comprehensive disclosure, but when you look at better companies, then you will see jewelry, this much, this much is coming from skincare, this is coming from other countries, etc., right? Other income, again, see other income which is given in income statement, they've given you the details of where it is coming from. So it is giving you more information on the line item that you are seeing in the annual report, the income statement that you're watching, right? The line item that you're looking at. Any questions, guys? This is clear. Footnote. What is the meaning of footnote?
Yes.
Okay. Any questions?
So all the terms that you have said, the EBITDA, EBT, and
Yeah,
those
that we will discuss. Don't worry. That the format of the income statement will discuss. Right now, we're just looking at and what are the meanings of this, right? Now, what is MD&A? Okay, so we looked at footnotes. Let's look at what is MD&A. So in an annual report, okay, again, let's open the annual report. Okay, and let's go to the start of the annual report. So very starting after the, what do you say, the index, the first part usually is the management discussion and analysis. Can you see my screen, guys? Can you see the MD&A? Okay, so MD&A is not you can't really call it as an income statement or something. It's just a brief summary of about the business, the industry, and what they think about how the business is going. Okay, personally, I never really take MD&A very seriously in the practical sense because it is usually very articulated, from the perspective of presenting a good picture of the business. Rarely have I seen, and usually that happens with very good companies, that they will talk about challenges that they are facing in their business, right? For example, Cox and Kings, if they had good intentions, of course, they would have presented the fact that they are siphoning off their money and making a lot of money somewhere else, right? So, but with good companies, they will talk about the challenges. For example, if you read the Titan management discussion analysis, they will talk about market share, they will talk about how the competitive space is changing, what are the, how are the gold prices affecting the the products that they're selling, the margins, etc., right? But it is unaudited, you cannot rely on it, right? There is no statement on it. Okay, all you need to understand is that this is not audited, but you can use it. What you can use it, or what we use this for usually, is, for example, if I'm making a financial model, or I'm researching on, let's say, Titan, then I'm going to use the competitors MD&A, management discussion analysis, to get some information on what they think about the industry versus what Titan thinks about the industry. Are you getting it? So it's a good place for market research. Okay, so as you can see out here, they've spoken about what the leisure international side of the business is doing, what the education side of it is doing, right? Etc. etc. So this is just basically a statement made by the management on the business. Okay. So keep that picture in your mind whenever you come across the statement MD&A. Okay. Always remember, it is not audited. It is not audited by the chartered accountant. It is does what I mean by that is, chartered accountant is not assuring the fact that it is reliable. Okay. Now that is where we come to the auditor's report. Whenever an entire audit comes, you have to express an opinion. And this is also, you can check in the annual report, it will be available. Okay. For example, if the auditing part started, but for some reason, let's say the audit could not be completed, right? So the chartered accountant or the auditor has to express the fact that this was not completed. If he feels that it was presented very well according to the standards, then it will give you an unqualified opinion. Okay, I'll write it better, unqualified. That means according to the standards it has been presented. Okay. Qualified means there is some issues. Okay, it usually does not mean fraud. Okay, the chartered accountant will usually never say that it's a fraud. Okay, he's not there to protect you from fraud. The chartered accountant or the reporting side of it is majorly concerned with presenting the data according to the standards, fairness and reliability, which basically means according to the standards. Okay. So if you are able to convince the accountant that you have presented according to the standard, there's no problem. That's where the issue lies. Because all of these financial statements have been presented according to the standards. But then how did the fraud happen? Right? So you cannot, of course, if it is I mean, if the data itself has been manipulated and the auditor has overlooked, then of course he is, responsible for it. But understand that there is one opinion called as the unqualified, which is there's no error. Qualified means there are some exceptions to the rules being followed. Okay, so that's where it is. Unqualified, qualified, adverse. I have rarely seen any adverse opinion because the auditor is getting paid by the company. Right. And that's in fact, when you're looking at the investment side of it, I'm always looking at, whenever I'm looking at stocks, I always look at how has the auditor's compensation been increasing. History. Look at the history of it. Is the auditor's compensation increasing significantly? Problem. Right. Has the auditor been changed too frequently? Problem. Right. So adverse is when it has departed from accounting standards and not presented fairly. Rarely will you ever see it. Qualified as some misstatement or exception to the account. Some of the rules have not been followed and it will be given proper in the annual report. You'll be able to read it. Okay, these are the exceptions. Okay, and unqualified is that reasonable assurance that the financial statements have been made according to the standards. Clear? Unqualified, qualified, adverse. Many examples of it. You can find it in the internet on how this actually works and should not work. Right? Any questions, guys?
No, sir.
Okay. Okay, this is okay. Other reports are interim reports and proxy statements. So interim reports are annually we are getting the annual report.
Ellen, just one thing on the
Yeah.
previous slide. So when we are talking about the adverse opinion, right? Then we also discussed an example where the auditors are getting replaced quite frequently. So who is the one who will write this one? Because whether it's the Big Four or the auditors who sign off the annual reports, right? So who says that it's my adverse opinion that the financial report is not very fair?
Auditors. So if let's say you have hired PwC, right, as your auditor, right? So auditor, the PwC partner is going to sign, no?
So like on 31st of March in India, so whenever they are releasing the statement, the auditor's signature is there. So that auditor will state, right? That auditor will
Not
state.
in March, actually, it comes by September.
Okay. Okay. So whenever it is getting released, so whosoever is the auditor in that point of time will say that prior to my getting onboarded as the auditor, these things have happened and I don't take the ownership. That's why
That is
it's an
obvious.
adverse.
That is obvious.
Right?
For example, in 2024,
Hmm.
there was KPMG.
Hmm.
And in 2025, there was a new auditor which was placed PwC. So the PwC, before even taking over, okay, it will not get involved in what was audited before, and it is not even responsible for it. Right? And if there are things which they don't understand, they will put it on that, clarifications have not been got for this, clarifications have not been got for this, as they will write the report.
Okay, okay. Because what I understand is a company cannot continue with the same CA or the same firm,
Of course.
right? Like they need to change it every like defined interval.
There is a proper guidelines for that. on how many years it has to be changed,
Hmm.
right? And see, more of that, no, see, all of this will come from the audit committee.
Okay.
There are committees, right, in the company. There is compensation committee, audit committee. Then there is, let's say, CSR committee, etc., right? So audit committees, you should see who is the head of the audit committee. If the head of the committee is the MD or the CEO, then that's a big problem.
This is the big conflict. Yes. Red flag.
Lot of problems can happen, right? And in India, you'll find a lot of companies in which this is blatantly being done.
Accepted practice in India?
Not accepted, overlooked, you can say.
Okay. Okay.
Right? So I mean, that is why I say, that see, this is where the conflict has started already. Now from here, this guy will get influenced.
I'll just give you an update like how things are working in UAE at the moment.
Okay.
So, like here, we have a practice of changing our statutory auditors every 4 years.
Yeah. So
Whether it's a listed
something
company,
I think in India also it's 5 years or 6 years, something
whether
like
it's
that.
a listed company, it's a private entity, it's an organization, whatever it is.
Yeah.
Now, what was happening was just to like no, especially for the family-owned businesses,
Yeah.
the big ones. So,
Yeah.
like every 4 years, they were technically changing the firm or the CA who was doing the audit, but the partner was same. The person who was signing off the report was same.
The
Right?
full name has changed.
Yes. So the company has changed technically on papers, but the partner who was signing, for example, Sunil was partner with PwC earlier. Now he moved to Deloitte, and Deloitte has got the statutory audit for company A. So
Maybe that is already getting followed in India. Who knows?
yeah. So just to make it more stringent, the regulators have made sure that there has to be a cooling off period for not only the firm but for the partner as well. So
Acha.
that protection has been put in place now.
That's very nice. But that's very nice. And in fact, you will see so many cases. I mean, I don't know whether you guys remember the Adani case, in which the auditor which was appointed had like, I think, chartered accountants. I mean, it was just a small firm in.
Yeah, very, very, very small firm. I was following this case very
Yeah,
closely.
so I was following. So, I mean, I don't really like to discuss all this as a controversial matter, but it was very funny that how could a small firm with, let's say, two CAs, that too with less than, I think it was less than 5 or 6 years of experience, were able to audit a huge company like Adani, right?
Yes.
So obviously, because they are not even auditing it. They're just there, they're getting money for using their designations and just keep quiet. That's why I feel that in any investment case, whether in India or abroad, most of the time the objective is just to get rid of any thieves. If we remove that, we automatically make money. In fact, there is a book. I have it here also. Yeah, it is called as Accounting Shenanigans. I think it's Howard Schillit. You can read this, it's very interesting. Specifically now, since you're doing financial statement analysis, you should read Accounting Shenanigans. Howard Schillit is the book, and
How do you spell it? Accounting?
Accounting Shenanigans. I'll just type it in the chat.
In the chat.
By Howard Schillit. It's a fantastic book. In fact, CFA Institute, this CFA itself that we are reading today, one of the chapters was actually made by Howard Schillit. And it was actually called Financial Shenanigans. I am not sure whether this time they have it or not. Maybe choice. So pretty interesting. So that's why if we approach financial statement analysis subject more practically, I don't think so issue is going to be very difficult to clear this exam. Okay, let's move forward. Okay, I think this is fine. Okay, a quick comparison between IFRS and GAAP, since this is a part of the content. Although I don't like to discuss it here because it's very difficult to understand at the moment. In fact, what we will do is we'll skip this right now because I don't think so this is going to make a lot of sense. We will discuss this when we'll reach specific topics of inventory or assets in financial statement asset. Right now, this doesn't make sense. Okay. Okay. Let's move further. Okay, other sources of information. Let's look at some other sources of information specifically to company earnings call, presentation. I'll show you all of this. Okay, let's see practically. So let's go to now some good company only now. I think we're done with Cox and Kings. Okay, can you see my screen? And now let's get into some good company like Titan, respectable company. Because see, again, you will see this difference with good versus bad. Okay, that the way they present information. Okay, so by the way, how do you get to that? This data is if any listed company's website, right? You will see an investor relations section. You can do this on your own at your end. And just give me a second. Yeah. Okay. Sorry about that. Okay. Can you come to Titan's website? On investor relation, click on investor relation. And now you can see annual reports here, right? What we basically discussed, right? These are all the years of annual reports starting from 1987. This is the source of, for us, the income statement, balance sheet, cash flow, MD&A, etc. Then, yeah, these are your interim reports, quarterly results, right? So every quarter, the company comes and publishes its annual reports. Sorry, the financial statements. So let's show you some. Quarterly reports, remember, they are unaudited. Annual reports are audited. So this is how a quarterly update looks like. Very brief on what has happened. Along with this will be an attached financial results, which is basically the interim report that the CFA Institute is talking about. So this is the interim report. Okay. So attached will be the financials. This is unaudited. Remember, this could be a question in the. This is a question actually most of the times in the exam is whether the quarterly results are audited or unaudited. Okay. Then you've got your presentations. So presentations are a big source of information if you want to create financial models. So let's see if I can get you to show you not this presentation. Yeah, earnings presentation. Okay, so let's look at earning presentations Q4. So earnings presentation basically will discuss in detail about, and this is where actually you understand about the business. I'm audible, right, guys? You can hear me, right?
Yes.
So let me give you some examples. So this is how we actually teach in the financial modeling class also. For example, if you had to understand how is the jewelry business? Let's say we wanted to understand about the jewelry business in detail. The matrices. Okay, so I think I've skipped it and I've gone ahead. Yeah. So you can out here understand that, okay, in the jewelry market, they're making 12% margin. And if you had to look at their brands on the brand performance, they should give you the brand performance data also here. I think they're giving it at the end. Yeah, there you go. So this is the reason why you look at supplementary sources of information. So this is jewelry and they've given you by brand, how many stores they have, how many stores have they added, how many towns do they have their presence on, right? And they given a comparison also between 2 years. So this is why you need secondary sources of information, and this usually you will get it with good companies. Okay, so this is earnings presentation or investor presentation, you can call it anything. So we looked at three sources. One was annual report, one was interim report, one was investor presentation, right? Now let me look at con call, earning call transcripts. So this is when quarterly, whenever the earnings is released, then the analyst and the investors come together and then there is a call. Okay. And you can actually access any company's call and read it. Or if you want to join live, you can join live as well. Okay. So this, so after the earning call has been done, then it is published physically like this. So you can see out here, all the CEOs of the companies of various divisions are there, right? Including the managing director. And then you've got all, so CV Venkat Raman is basically the MD of the company. And then you've got various people coming in from, let's say, if you have to give you example. So out here, you've got Nitin Jain from Fairview Investment. So you can see out here, right? So he's asking a question related to the company's operations. Then you've got another one which is talking from, so this person is from IIFL Investments. So this is what is con call transcript, earning transcript. Okay, again, a big source of information for financial statement analysis. Okay, then you can also access this if you want to hear it, listen to it.
Ladies and gentlemen, good day and welcome to the Titan Company Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode.
So this is the starting.
Margins or whatever. It's okay. Nothing much. It's an operational piece actually. So if I make summarize or paraphrase, the way it is this is to modify the incentives to move product mix upwards and should not.
So that is how, in fact, I would, recommend you guys to join some of these. If you're following a company, you should join of these con calls. You'll understand the business like nothing like what you've understood before, right? Okay, let me see what else do we have here. Okay, that's it, I think. So now let's see if you can answer these questions. And please look at the question first and read it. That is what the habit that we need to make in case of preparation for CFA. Okay, look at the question properly. Do not be in a hurry to answer. Let's look at the first question. Ratios are an input Which step in the financial statement analysis framework? Come on. Sorry?
Process data.
Correct. Right? Which phase in the financial statement analysis is most likely to involve producing updated report? Again, see, whenever we are doing CFA exam, remember, we make mistakes out here. We're reading through the first part very fast, but we do not read the second part. Producing updated reports and recommendations.
This is C. Develop and
Develop.
communicate conclusions.
Okay, are you sure?
Update reports.
That should be follow-up, I believe.
Oh,
Right? Because see, that was the part of recommending conclusion.
yes, yes, yes.
That's what I'm saying. CFA exam is all about reading the question properly. It's not difficult. It's just you have to be very careful. Which of the following best describes the role of financial statement analysis? Again, read the second part of it. To provide information about a company's performance, is it? No, that is reporting. That is the work of the chartered accountant. To provide information about a company's changes in financial position, is it? That's also reporting. To form expectations about a company's future performance and financial position is a part of financial statement analysis. Okay. The primary role of financial, and by the way, these are all end of chapter questions, and this is what I strongly encourage you to practice. The primary role of financial statement analysis is best described as providing information useful for making investment decisions. Okay. Evaluating a company for the purpose of making economic decisions. Using a financial reports prepared by analysts to make economic decisions. Yeah, okay. So using financial reports prepared by analysts is not the perspective of financial statement. We are using first-hand resources, right? Evaluating a company for the purpose of making economic decisions.
No.
Providing information useful for making investment decision. Are we providing information? We are not providing information.
Evaluating it.
We are evaluating company for making economic decision. What is economic decision is not always economics. It is economic, matlab any buy or sell decision that we're taking is economic decision. Right? See here, the keyword providing information. We are not providing any information. Right? We are not using any data from any analyst. Right? So if you can see, it is not a competitive exam. Right? If we have looked at the content properly, then we will clear it. Okay, now let's look at, look at this question. Where is my pen? Can you see it or should I zoom it? Okay.
Now it's better.
Yeah. Now, international financial reporting standards are currently developed by which entity? There is nothing called as an IFRS foundation. I remember I told you IASB, FASB, right? FASB is for US GAAP, IASB is for IFRS. Okay, see, and there's nothing called as IFRS foundation, first of all. And International Organization Security Commission, something different we talked about. It is an organization of all the regulators in the world, right? So it is IASB, International Accounting Standards Board. You will remember this anyways, as and when we start keep on doing questions. US GAAP are currently developed by which entity? I said FASB. This is straightforward. Just remember FASB, IASB. Okay. A core objective of IOSCO is to eliminate systematic risk, to protect users of financial statements, or ensure that markets are fair, efficient, and remember, IOSCO is a consortium of regulators. So hence, they cannot eliminate, you can never eliminate systematic risk, right? Protect user of financial statements, are they? Is SEC or SEBI a financial statement regulator? No. So ensure that markets are fair, efficient, and transparent. Efficiency is a big part of the role of SEBI, if you have seen, right? That settlements happen on time. If IPOs are released, then the company is profitable, right? Etc. Etc. Which of the following best describes why the notes that accompany the financial statements are required? Okay, look, permit flexibility in statement preparation? Of course not. Standardize financial reporting across companies? No. Provide information necessary to understand the financial statements? Which one? Out of these three? 8. You tell me. Which of the following best describes why the notes of the company's financials are required?
Standardizing.
No. Standardizing, do you think, if we have, remember what is footnote?
They are providing information necessary to understand the financial
More
statement.
information, right? Revenue, and
They
then
give
you
the breakup of that, yeah. So
below.
details are there.
Correct. So provide more information, right?
Yeah.
Standardizing financial reporting is not, that is the job of IFRS or US GAAP, because all the companies are following similar kind of standards. And we absolutely do not want flexibility in statement preparation, because if flexibility is given, then you cannot rely on the information. Okay. Next question. Accounting policies, methods, and estimates used in preparing financial statements are most likely to be found in. Okay. Auditor's report says qualified, unqualified, or adverse. Management commentary, which is MD&A, I showed you, is about the business and it is not audited. So which option remains? Notes to financial statements. And that is where exactly all the details of the accounting estimates or any assumption which has been taken is used, right? So notes to financial statements. Okay. Next. Information about a management's director composition. Okay. This, I had not discussed this, but I'll tell you that there is something called as a proxy statement specifically in the US, which they release, and that has all the details about the salaries that the executives get, the senior executives get in a company, which is called as proxy statement. Okay. That is not actually a part, that is not actually called a proxy statement in India. It is a part of the annual report only, and you'll get it. Information about a company's objectives, strategies, significant risks are most likely to be found in
Auditors.
auditor's report is just telling you the fairness of whether the statements are getting presented according to a certain standard.
This is more of a management commentary.
Yeah.
Because earlier it used to be CSR reports, now it is ESG reports where all these information are
Yeah,
getting.
ESG report would be a third party report,
Yeah.
right?
So this
But
is where they capture such information.
yes.
How's it in India? Like what reports are being produced?
In for what?
Now for this one, we are talking about the strategy.
This MD&A report is there.
Okay.
The times, what in terms of the company's risk, etc. You have McKinsey reports, you have IBF reports, you have the research analyst reports which have been written by various companies, right? So I think in India there's no specific source as such. And anyways, the ESG reports which are created are not even getting created for Indian companies. But what I was saying is, I just forgot. Yeah, Sanat, I hope you are not reading this part. See, look, company's objectives, strategy, and significant risks. Remember, I had shown you MD&A, management discussion analysis. That is where the company is basically talking about what is going to happen in the company, what are we going to do. Auditor is not a part of your business operations. He is not really interested in, which product you're going to launch or not, right? That is going to be a part of MD&A, right? I hope you understood that. Any questions? Clear it out right now only.
So the auditor's report is in external commit or internal commit of the company?
The auditor's report, remember I showed this adverse, qualified, unqualified. Unqualified,
Yeah.
both.
Those are the statements released by the auditors.
Yes, it is just saying whether the statements are getting prepared according to the standard or not. Always remember, auditor is an external party, making sure that your financial statements, think about like a CA. Is the CA going to talk about objective strategies and significant risk of your company?
No.
No, right? Okay. What type of audit opinion is preferred? If when you are looking at the question, look at the English, what they're saying. What type of audit opinion is preferred, meaning which is the best opinion out of these three?
Unqualified.
Correct. Unqualified means no problems, reasonably presented. But it does not mean that it is very good. It means it has been presented according to the standards. Okay. An auditor determines that a company's financial statements are prepared in accordance with applicable standards, except with respect to inventory reporting. Now, see, there's an exception now. So, which opinion is going to be most likely be given? Now, you tell me.
Qualified.
Correct. Qualified means good
Errors are accepted.
exceptions, right? An independent, इसका last part नहीं है मेरे पास. I think you must be having an independent audit report is most likely to include absolute assurance. Independent auditor meaning basically an auditor which has been hired by outside third party is an independent auditor, right? So is most likely to provide absolute assurance. Is there something called as an absolute assurance?
No.
Reasonable assurance that the financial statements are fairly presented. I don't know what is the option C, but I think 14B looks like the correct answer.
Unqualified opinion.
यही है ना? 14 का I think you must be having the curriculum, that's what I'm saying. Let me check.
Are these the actual questions that come in CFA exam, or this
Yes.
is just the end of book question?
End of chapter questions is what will come.
Okay.
Because you can see that the question is very small, right? Questions are very short, but they do ask you exactly awareness of the content. That is what I'm saying, awareness of the content. Okay, now I'll share the other part of the screen because I think that rest of the questions are not visible. So I'll switch to FSA curriculum. Okay. Right, a qualified opinion with respect to transparency of the financial markets. So when you are hiring an independent auditor, obviously there is no absolute assurance. Reasonable assurance is possible, but can you say that a qualified opinion with respect to transparency? How can you say that? It's not possible, right? Option B. Qualified means exceptions. We don't know whether the exception has happened according to this question. Interim financial reports released by the company are most likely to be. I kept on saying this question will come. Interim meaning quarterly financials.
Unaudited.
Yes. I'm telling you guys, I've done this. I know what kind of questions will come. Please understand. Which of the following sources of information used by analysts is found outside a company's annual report? Auditor's report is a part of company's report. MD&A is a part of company's annual report, which is not peer company analysis. Okay? So we have discussed this chapter in a way that you don't have to discuss this again. Okay? And hopefully we'll do the same for the next chapter also. Now, what I would suggest you is, okay, I'll tell you what to do during the week. Please go to the curriculum which I've shared with you. Okay. And I want you to do very specific things. Okay, not read the entire thing because that I've already covered. I want you to go and find these small cases which, can you see these black boxes? Exhibit 2, you will see black boxes which are basically case studies. Okay, cases which CFA Institute has discussed. I want you to read them, only read them. Don't be in a hurry to analyze them. Just read them. That's it. Okay, black boxes. Those are all case studies which the CFA curriculum discusses again and again. All I want you to do is just go and read that. Questions we have done, topic we have done, that will seal the topic until your exam. Then any questions?
Sir, within a week we have to cover the all curriculum.
No. Again, I'll say the curriculum, inside the curriculum, just read the black boxes.
Okay.
Wherever you'll see a black box, that is basically a case study which CFA Institute has discussed. On the same topics, we have already learned all the content. In fact, we have done all the case studies also, but I want you to read them so that will give you more perspective. That's it. Okay. All right, guys. Thank you for joining in. Let's catch up again.
Thank you.
Thank you. Bye-bye. Good day.
Thank you. Bye.